Hello, friends. How are you? Welcome back. So, today's topic is capital management. So, this is very important thing in trading. I would say that this is just a backbone for your capital or whenever you're doing any kind of trading. So, consider this as a backbone. Okay. So, let's try to understand. So, every trader dreams of making consistent profit, right? But few understand the capital management is a real backbone of success in the stock market. Making money is one thing, but keeping it is another. Capital is your fuel, and without proper management, even the best trader can lose everything in the matter of the traders. Today, we will dive deep into the importance of the capital management and how can you protect and grow your trading capital strategically. So the first point is protecting capital is more than important than growing it because without capital there is no second chance. Many traders focus on how much they can earn, but great traders focus on how much they can afford to lose. Without capital, there is no second chance. It's like driving a car before thinking about speed. You must check the brakes. The golden rules are the first rule is that trading is a survive. Second rule, preserve your capital. And third rule is then grow in steadily. You don't have to be every trade. A lost opportunity is better than the lost capital. Next one is profit come and go, right? But poor capital management leaves permanent disappear. Even the best trade lose the traders. The difference is that they manage their capital wisely. The poor trade may win big ones but lose it all in next few trades. A real dangerous isn't losing money. It's losing your all your money. That's when you are forced to quit. What's the solutions? So position sizing never risk more than 1 or 2% of your capital in a single trade. Risk reward ratio should be aimed like at least 1 is to 2 or 1 is to 3, meaning for every 1 rupees of risk you should aim to make 2 or 3 rupees against that. No leverage great skills. Unnecessary excessive margins will wipe out your accounts faster than you think. Trading is a long term game. Manage your risk and you will stay the game for long to win. Next one is the real goal is not just to make money, but to stay in the game long enough to multiple it. The market is a machine that transfers the money from the impatient to patience, right? Your focus should not be to getting rich quickly, but to staying in the game long enough to let the compounding works its magic. Think about this way that day traders survive day by day, swing traders survive week by week, position traders survive month to month, and the best one is that investors survive years to years. The longer you stay in the game, the more you learn and more chance to get to win. Next one is risk what you can afford to lose, not when you emotionally can't afford to lose. Traders don't just lose the money, they lose the sleep, peace, and confidence. That's why you should never invest money you can't afford to lose. If you're losing 10,000 in the market affects your mood, works and relationship, you are risking too much. Your capital should be calculated, not emotional, planned, not impulsive, and protected, not with gambling. Trade like a business and not a casino. Next one, you don't blow your account in one bad trade. You blow by the not managing the capital over many trades. A single bad trade should never be able to wipe out your account. However, you are not managing your capital risk wisely. One mistake can end everything. Some traders double down on losing the trades, hoping to recover losses. Or some traders revenge the traders, risking more after losses. Or some bet their entire capital on one stock, thinking it's guaranteed win. All of these mistakes come from the poor capital. Instead of focus on limiting risk and letting the winning the trades and grow on. The next one is capital isn't just a money, it's a time, opportunity, and peace of mind. Managing all three, it's very important. Capital is not just a money, it's your account. It includes time. I would say time like time, ability to trade another day. It gives the opportunity, the power of enter the good trades without fear, and peace of mind knowing your financial health isn't risk or it is not going to affect anymore. And the last one is capital management is not an optional. It's an insurance policy in the market. Think about capital management as an insurance. You may not need it every day, but when disaster strikes, you will be grateful to have it. A trader with solid management plan always have capital left to trade another day. Doesn't take excessive risks to recover the losses, and the trades stress free, knowing every position is calculated. Market rewards are discipline, not gambling. The more you protect your capital, the more chance you to get to grow in it to it. So takeaway from this video is that trade smart, trade long term. The goal is not to make fast money; it's build lasting wealth. A smart trader protects capital first, takes calculated risk, and lets compounding do their magics. Survival is the name of the game because you are not in the game, you cannot win. Capital management is not an optional, it's an insurance policy in the market. Respect it and it will reward very nicely. Thank you very much, guys. See you in the next lecture. Thank you.